And you know I got your back. You put your trust in him, you can depend. And I know it, cause he showed it. Be with you till the end.
Thank you for watching Ask Crystal Morris. The purpose of my video blogs are to give you the information that you need to make good decisions for your specific circumstance as it pertains to residential mortgage lending. So I hope you enjoy it. When you qualify for a mortgage loan, you have to income qualify, credit qualify, and asset qualify. Today, we're going to focus on asset qualification. When banks asset qualify you, they're looking to see that, one, you have enough funds to complete the transaction. That means that you have enough money to cover your down payment and closing costs. We're looking to see that you have demonstrated the ability to save your money. We're looking to see if you have a pattern of getting overdraft and or non-sufficient fund charges. We're looking for any unusual large deposits in your account. And we're also looking to see if you're going to have enough reserve funds left over after you've covered the charges for your down payment and closing costs. The first thing that I would like to mention about asset qualification is that all funds used in a mortgage transaction have to be sourced, meaning that they have to have a paper trail. They have to know where the money is coming from. So you can't save money underneath your mattress and then expect to use that money in a mortgage loan transaction. You can't do that. The same thing applies for if you were to, for example, give someone some money or let them borrow some money, and then they pay you back, and then you just throw that money into your account. You can't do that. That's a cash deposit, which is going to be questioned by an underwriter. Now, you can get a gift from a family member to help you to complete a mortgage loan transaction, but even that gift has to be sourced. It has to have a paper trail. So if you have a family member who does want to help you, just make sure that they're prepared and that they are ready and willing to provide you with the documentation to show where they had the funds available and where they withdrew them from their account to give to you. Sometimes, again, that can be a sticky situation because people feel like, well, I'm not the one buying the house. Why do I have to provide my information? But that's just the way it is. All funds have to be sourced. So keep that in mind. The other thing that I would like to point out is that when you are asset qualifying, you have to have enough funds to complete the transaction. That means you have to have enough funds to pay both your down payment and your closing costs. And there are two different things. Your down payment is the difference in between the sales price of the home and the loan amount that you get from the bank. Whereas your closing costs are the fees that are assessed to you to complete the transaction. So let's look at a chart so that we can kind of compare the two and you can get a better idea of what the difference is in between closing costs and down payment. On the left side of this chart, we have information about your down payment. And on the right side, we have information about closing costs. Take some time to review the chart so that you have a better understanding about the difference in between the two things. In the scenario below, I gave you an example of Jane. She's purchasing a home at 123 Sesame Street. Pause the video and take some time to read it. Hopefully, you'll have a better understanding of the fees that are associated with purchasing a home. And if you get to the very bottom of the scenario, you'll see where Jane actually needs $7,000 to complete this particular transaction. So when a bank reviews Jane's bank statements or asset statements, they're going to be looking to see that she has at least $7,000 in her account for this particular scenario. The next thing that I would talk about in regards to asset qualification would be demonstrating your ability to save. When I say demonstrating your ability to save, I mean, do you have a habit of consistently depositing money into your savings account? That's not to say that you have to have a savings account to save money. Some people save money in their checking account. Whatever it may be, do you have a habit of doing it? Can you demonstrate the ability to do that? Bank underwriters love to see that you have a habit of saving because it looks like you are a good credit risk to them. And when I say saving, I also want to mention that banks not only require you to have like money for your down payment and closing costs, some banks will require you to have reserve funds. What I mean by that is money left over after you've covered the cost for your closing costs and down payment. So in the example, we'll use the example for Jane. Some banks want you to have at least 2 months worth of reserves left over. And what I mean by 2 months worth of reserves is that, let's say for example, it's 2 months worth of reserves is equal to 2 months worth of house payments. So let's say for instance, if you were purchasing a home and your house payment was $800 a month, then they would want to see that you had $1,600, at least $1,600 left over after you've covered the costs for your closing, or covered the charges for your closing costs and down payment. So in the example that we just looked at for Jane already had to bring $7,000 to closing, and if her house payment, for example, was $800 a month, she would have needed a total of $8,600 in her account. I hope that you're able to understand that. The other thing that I want to point out or let you know is that 401k is considered an asset or reserve, even though you don't have to spend that money in the transaction. That does support or show a habit of being able to save, so you are able to provide 2 months worth of bank statements to show that you have some savings left over. The other thing I want to point out are overdrafts and NSFs. That's a bad thing. Banks do not like to see that. Having multiple overdrafts and non-sufficient fund charges demonstrate an inability to manage money effectively. So even if you have like an overdraft account that's for that, it doesn't look good. Banks don't like to see it, so don't do it. If you know you're getting ready to apply for a house, work really, really hard to manage your money effectively so that you don't have those overdraft charges. The last thing that I would like to point out about asset qualification are large deposits into your account. Again, all funds have to be sourced. So any unusual large deposits in your account will be questioned by the underwriter or by an underwriter, whoever is underwriting your loan. So a large deposit is anything above 25% of your gross monthly income as a deposit. But I will tell you this, some people or some underwriters will question any cash deposit into your account that's not consistent with your usual deposit, like direct deposit from your check. So granted, some people still don't get direct deposits from their check. And for those people, I feel sorry for you, because the burden of proof to show that the money that you're depositing in your account is in effect that it's actually from your check is going to be up to you. That means you're going to have to go back and get copies of each and every one of your checks for maybe the last 2 months to show that each deposit in your account was from your check. And hopefully you would have deposited the exact amount of your check, because if you deposited maybe a portion of your check and then took the other portion out cash, that's going to be a headache for you. It can be done, but again, the burden of proof is on you. So my suggestion would be that you get direct deposit. If you don't get direct deposit the whole amount of your check into your account, and then in a separate transaction, take out the cash, especially if you know that you're getting ready to try to qualify for a mortgage loan. Again, now, back to the large deposits into your account. If you are self-employed, you may make a whole lot of cash deposits into your account. If you are a bartender or a hairdresser, barber, or whatever, the course of your business, you're mostly paid in cash, right? So you're going to make a lot of cash deposits, and that's okay as long as it's consistent. You don't want to show that you're making $20,000 a month in cash deposits, but then on your tax returns it looks like you made $15,000 for the whole year. So again, you want it to be consistent. You want it to look right. So I hope that was helpful. I hope you were able to learn something from it, and that it's able to help you in the process of while you're trying to get qualified for a mortgage loan. Like my page, Crystal Avery Morris. You can follow me on Instagram and on Twitter. All of that information is on my Facebook page.
And you know I got you back. You put your trust in him, you can depend, and I know it, 'cause he showed it. Be with you till the end.